6 weeks ago.
Alrighty. The 2 minutes was exactly European Standard Time 2 minutes, so I'm proud of myself. Give it up for me, yeah. All of you know me by now. My name is Ife Badajo. Again, you've seen my name at least in your inbox. Thank you again for being here. This is the last workshop for St. Maarten Financial Literacy Month. Over the past 29 days, there's been no less than 14 events of all kinds, fireside chats, workshops, the National Youth Pitch Competition, all of it. And to do 14 to 15 events in 30 days is known as crazy, but we did it. So that was, thank you so much. That's also because of you showing up and continuing to show up regardless. Some of you have done all of them, some of you have done most of them, some of you have done some of them, but we appreciate your commitment to your own financial literacy and success. Tonight we have two amazing people, nobody better to share with you on the introduction of investments and stocks. And Emilio is a financial wizard, a financial expert, has experience in many different regards. He's going to go ahead and share a little bit more about all of his experience. And then, of course, you know the Minister of Finance, who is really about finance, including investment, has been investing for some time. So he also has experiential knowledge to share with all of you, okay? So please give both of them a big round of applause.
Good evening, all. Today is a full house, obviously. So this class actually was intended for about 40 people when we initially planned it, and then we had an enrollment. We had about 120 registrations for a 40-person class. So we decided to do another one. We still don't have enough space for the persons that didn't make it. So again, it shows that there's a hunger for knowledge, especially financial knowledge. I see right here that has been through everything that we did. In addition to that, I believe in, I talk about I believe in independence. The only way to get to independence is also through financial independence. Not just as a country, but then also for yourself. If you want to be independent, you need to be financially independent. In addition to that, the reason why we did Financial Literacy Month was for us to develop tools and skills for people to be able to make better decisions. Right? So we have a whole month of tools that would allow you to not only generate money, but how to be able to spend money, save money, also build on your business skills. Today is actually an introduction to investing and stocks. So there's levels, I would say to this. The last class we did, after 2 hours, they said we want another hour, they want to continue. And so guys, it's a free class. But again, they said we have 2 hours, they're very engaging, and I think they appreciate that. Myself, so I started investing in college first, and personally, and also take some classes in school. Outside of that, when I came back home, I didn't have the same access to the brokers like I had in the Netherlands, so I couldn't continue investing. And then through Emilio, I found, at that time I found Ameritrade, an American broker that I used at that time. But then because of these international laws, a lot of American companies stopped allowing some markets to get on profiles. So I couldn't invest anymore. And then through Emilio, I found another company called Interactive Brokers, which we both use. I think he also uses some others. Interactive Brokers at that time, we had to put up about $5,000 to get on, or $10,000 to get on. And if you went through an advisor, which he is, you have to put up $5,000. Since then, the company has increased, so that limitations is no more here. But at that time, I went up under Emilio, did my $5,000 to get back on investing in 2016. started back investing in 2016. Today, obviously, it's about investing stocks, bonds, and so forth. But investing has also allowed me to invest in other aspects, right? So through investing in stocks, I was also able to, let's say, use my profits to now move into real estate, for example.
So I love investing, I love teaching. I've been in the banking world for a number of years. So I have a banking background. I also have I'm a pilot as well, so I love flying. Flying is actually my passion, not finance. Most people think it's finance, but it's actually flying. And so I'm just going to share some of my knowledge that I attained during my term investing on the stock market. Okay, so this particular class is going to be very interactive, so you're going to have to write out stuff and do some calculations. In the first class, it wasn't like that, because I thought it was a 3-hour session. It was actually only 2 hours. So I prepared the session based on 3 hours and not 2. Now we have an introduction. We're going to do an icebreaker. The icebreaker is going to assume we have a private company is going to establish, and the company want to issue shares. And then we have to buy these shares. So that's going to be a little exercise. We're going to go through that as an icebreaker. And then we go further on into the session. Then I want to talk about why you should invest. Why you need to have a vision and goals. Financial planning, what is that? The financial laws, there are 3 of them. You'll get to see what they are. Time value of money and investments. We'll talk about that. That's going to be the key. And then investment types and tools. The tools that you use to invest. And then we're going to do a little exercise determining what's your risk profile. Like the minister said, he's very he's a risk taker. I'm in somewhere in the middle, depending on what it is. So we're going to do a little questionnaire if we have time. And then I'm going to touch on the process of diversification, buying investment strategies, as well as buying your first stock. Now the objectives are as follows: to give you insight into the world of investing. As the minister said, investing is pretty broad. You'll see why in a bit. And actually, so it's a free workshop, so you can't cover everything in a 2-hour workshop. The pros and cons about investing on the stock market, the evolution, so it has evolved. It used to be something great, that was very speculative. Common pitfalls most investors make, especially when they're starting out, as well as my personal experience since 2007. So this is when I started in Zephyr Trading. So this was in December 2007, just when the market started to crash. There was a crisis, a recession, and I started just a few days prior to that. So I started off in the worst of the worst, put it that way. But it was an interesting experience, and I got through it, and it taught me a whole heck of a lot. Now we're gonna do a little exercise now. The company is in Mexico, in Tulum, Mexico, and they already have a sort of a hotel. Now they want to do a next project, and they're looking for investors. So we're gonna kind of go through this exercise. But first, I'm going to play this video for you guys to see what it's about. Okay. So that was a little introduction to what the company is about, and they're looking for investors. So the first thing is we have to understand what stocks are. Equity, you call it. Anyone know what stocks are? So we have NVs in St. Maarten, we have BVs, and most people think NV is just to separate your personal assets, but it's also a company that can raise funds from shareholders. And most people don't typically use it for that in St. Maarten most of the time, but it can be used for that. So if I ask what is a stock, what is the equity? It's basically, once you're a shareholder, you own part of the company. Okay? So it's nothing complicated. Just that it means that you have a share in the company. And stock represents a claim on the company's assets and as well as the earnings. Okay? And then you're entitled to vote. So each stock gives you a voting right. And to raise companies can either borrow the money or they can sell off part of their company in the form of common stock. Also preferred stock. The only difference between common stock and preferred stock is that preferred stock don't have any voting rights. So you give up your voting rights for a fixed return on investment. Whereas common stock, you might not get anything. It really depends. But If you decide to go for the preferred stock, if the company issues it, you give up your voting rights and you get a fixed return giving up your voting rights. So before we get into the exercise, there's a definition you have to know because we're going to do some calculations. Earnings per share. So earnings per share is basically the net profit of a company divided by the shares of that company. Okay, so net profit per share. So if you purchase 100 shares in the company and the company have made $2 per share, the company wants to distribute all of that, and you have 100 shares, basically mean that you get $200 if they decide to distribute all of it. Most of the time they don't do that. Most of the time they distribute a percentage of that earnings per share. They have a dividend policy, and the policy determines how they're going to pay out the earnings per share. Then we have something called a PE ratio, price earnings ratio. It just takes the price of the company and divided by the earnings per share. And that represents a number. Basically, that number is basically if the company has something called status paribus, meaning that if nothing doesn't change in the company, that number, whatever it is, that tells you how long it would take you to get back all your money basically. So if you have a PE ratio of 5, it tells you if nothing doesn't change, the company keeps the same amount of profit. It will take you 5 years to get back your money that you put in, so to speak. That's a PE ratio. So it tells you, given all things remaining static, how long it would take the company in years, given the level of the earnings per share, to make back the price you paid for the share. So if your PE ratio of 10, it means it would take the company 10 years to make back what you paid for the stock. However, this fluctuates a lot. Because if the earnings go up, of course the PE ratio is going to drop. Okay? So that's why we always take an average over the years. Okay, so now we're going to do the exercise. So a private real estate company, the company we saw in the video, is offering shares to raise $2 million US dollars. And that represents 40% of the company. So to recap, the private market is where securities are created. In the private market, companies sell new stocks and bonds to the public for the first time, such as the IPO, initial public offering. Once created, shares are bought and sold among investors, what is called the secondary market, which is the stock market. Taking pictures. I'm going to send you guys the presentation now.
Thank
you. The secondary market exists to give investors the chance to cash in their investments without having to liquidate the company. Because actually, if you want back your money actually in the primary market, the company, if they don't have it, they would have to liquidate the assets they're about to pay you back the money, right? Yeah. So in order to avoid that, to have a secondary market, you can go ahead and speculate on that how much all you want. And that's basically the stock market. There's some major secondary markets, the Amsterdam Stock Exchange. You have the New York Stock Exchange, you have the NASDAQ, you have the Toronto Stock Exchange, you have the Tokyo Stock Exchange, London, right? So these are the major ones. You can also, with interactive brokers, you have access to the world. So you can invest in Amsterdam, New York, London, Tokyo, Australia, you name it. So despite the stock market evolving into the unintended speculative bubble, it's really speculative now, right? It's really speculative. It's so speculative now that a lot of public listed companies on the stock market are moving now to become private. So that's one of the problems.
I don't find aspect of it.
No.
It is, yeah. But so in the past, I said Emilio is very traditional price earnings ratio and so forth, which is the way it was meant to be. But because of speculation, we get rich quicker, right? Because let's say like Tesla, for example, they bet on the future, right? They don't bet on what it's doing right now. They bet that sometime in the future this company will be worth this amount, right? A key example of that is Amazon. So Amazon last month they made profit for about 10 years ago, what it was, right? But they just bet that in the future Amazon will be what it is today. So there is now, I would admit to that, there is a little bit more of an emotional investing, right? Because more players have access to stocks now, right?
Also
so,
leverage.
Also leverage.
Leverage is basically borrowing money and then using the money to make money, even though it's not your money. Mm-hmm. Because of that, they have a fake type of demand. Mm-hmm. Because if you have to work hard to buy something, it takes longer. The demand don't happen like that. But if I can just borrow the money now, the demand will go through the roof. That's what happens in the stock market as well.
And what he means by that is that in the account, so in the active words, for example, if my account has, let's say, 30,000 pounds on it, they allow you in Dutch, to go in the road, right? They allow you to borrow money from them.
The overdraft.
Or overdraft of, let's say, an additional 25,000. So less than what you have in your account.
A lot of aspects to that as well, but yeah, this is a introduction. Because of the specific nature, you have to understand the various players in the market, as well how they play in order to know when to come in and out. If that's if you're not a person who can take risks, you can't sleep at night. Put it that way. But knowledge reduces risk. The more knowledgeable you get in the market, the risk gets reduced. Like, for example, you have option contracts, it's like insurance, that can actually protect you from if the price fall, you can still sell the share at the same price you bought it for. If you buy something called a put option.
That's an advanced.
That's advanced something. But once you know the knowledge, it helps reduce the risk. Also, patience. That's one thing you have to learn in the stock market. Patience. If you're patient, you can make a ton of money. If you're not patient, you will lose a lot of money too.
I guarantee.
Yeah. Now, why invest? I'll ask, why invest? Why do you think?
Like the minister said, to make the money work.
Okay. Well, this is my framework, something I create. Life atom model. So it's based off an atom. Atom, you have 2 protons, 2 electrons, and a neutron. Time, nothing exists without time. Okay? So how you allocate time to financial plans, just like a job or whatever you make money with. So you have to spend time to nurture that. Nurture spirituality, nurture family, nurture health, right? The problem is, sometimes we focus so much on this, the health goes through the window, family goes through the window, and your spirituality goes through the window. So how you balance this is very important. But the correct thing is, time is money. So if you can find a way to make money or make the same amount of salary without working, you have a lot of time for these other stuff. Right? So that's the key here in this whole thing. So I can make a course from each of these atoms actually. So if I take a snapshot of health, you can see health consists of eating well, writing, exercise. This takes some time. And when you're doing this, that means you can't, if you're working a job to make money, right, you're going to lose out on that. That's why you have to get passive income, then you can focus on this as long as you want, as an example, right? Then we have the family atom. Family planning is very key. A lot of people don't do it. More children mean more house space required. Okay? I'm just saying, more children, more food, more school fees, quality of time, etc. required. So this is something you have to also take into consideration. Family nurturing, so support, backbone. So if you have a dysfunctional family, you don't have a good, strong backbone, it's also a problem. That takes time. Wealth is measured in time, not money. That's why you say time is money. The definition of wealth is the number of days you can survive without physically working and still maintain your standard of living. That's wealth. And we're going to see how that's calculated just now. Investment return that can grow to match or exceed your earned income can free you from an 8 to 5 job, thereby freeing up the time to do other things. This is one of the reasons why we invest. Also, the scripture says this as well. It says, the things of life. It says, send your grain. When you talk about grain, what is that? Seed. Seed can multiply, right? It says, send your grain across the seas, and in time, crops will flow back to you. But divide investments among many places. You don't know what risk may lie ahead. Other translation would say, you don't know what disaster may come upon you. We had the COVID disaster, and most people get wiped out.
Right after the hurricane.
This is also in scripture. Inflation. That's why we invest. One of the reasons why. Cost of living. And you can see inflation can be described here. Here, back in the day, you had the industrial production index. So this is the production itself, so goods and services, so to speak. And you can see the money supply used to be below it. So that's why back in the day, at 25 cents, you could go out to the movies with your little darling. You could have popcorn or whatever and still have change. not happening at all. The money supply starts to grow higher than the production index. It means that you have more money chasing fewer and fewer goods, causing the price to go up. Right? So the money supply is the problem. Okay, and this is not going to stop. If it was going to stop, it will never go parabolic. And we're going to explain what exponential growth means in a second.
You have to component here.
Yeah. I don't know if we have enough time.
We have to keep this one. Keep some of
Yeah. Another reason why, as Warren Buffett said, if you don't find a way to make money while you sleep, you'll work until you die. That's a fact. Pensioners going up. Right? A lot of things going up, except your income. Universal basic income, I had a discussion with the IMF, and we come up with this sort of formula. Productivity is automation plus capital plus earth resources plus labor from robotics and labor human. The problem we are seeing is that robotic labor is getting so efficient, you might not need this anymore. Okay, that's a problem.
ChatGPT.
Yeah. So what happens when robotics labor becomes more and more efficient? From this equation, I can start taking out the human part. So that's why they start talking about universal basic income, because what if persons are not working, what are they going to do? And they need to eat. So they need to have some type of income to eat, right? If 10% of the world's population owns most of the capital, right? What does that mean for the 90% without capital ownership? They're going to have to go on UBI. So the conclusion between me and IMF guy is we got to try to get capital as much as possible. Because we don't control automation, we don't control that, but we have capital in, right? The money can come to the 10%. The 90% can get basically wiped out. Okay? Want to say something?
Stop scaring them.
Well, the question mark is why invest? This is one of the reasons why you invest. Because when you invest, you're talking about getting capital. You pump capital in to get more capital.